The performance cycle process. And it comes up with these four quadrants. Now, before we go into a little bit of an overview on it, just a quick question. I mean, I was quite curious. How did you come up with this model? Was it something that existed and you modified it, or was it totally from scratch by working with many of these institutional and retail traders?
Well, actually, it came from a diploma course I was doing in a form of psychotherapy. So when I was learning coaching in the early years, I found one particular form of coaching that was really interesting for me. And it was closely connected to a form of psychotherapy. That and when I was at this one of the workshops for this particular diploma which I was studying, they introduced a model which looks a little bit like that. And they were describing how it helps people meet their needs when they're engaging in their everyday activities. And as they walked us through it, I realized, this is what we do when we're trading. We're engaging with the outside world and with ourselves. We have a need that needs to be met. And it follows a particular path, a kind of a path about that changes as we engage with uncertainty, with the external environment, in this case, the markets. And it affects us. And we need to manage that and try and stay optimal, so as not to have an unhealthy connection to the outside world, the markets, in other words. So I was learning about this model, which is called the cycle of experience. I found myself thinking, wow, this is trading. This is what I do. I'm seeing exactly the challenge of trading in this model. And then I started, as I was coaching people, it started to form in this form. I found myself starting to explain the model, but in a way they could understand and it could resonate with them, because it doesn't look as clear and simple and the language as this. So I sort of started redefining it in a way which might work for people who don't really understand some of the therapeutic terms and terminology that goes with it. And I wanted to make it simple and structured in a way as well, such that I could actually engage with people on it without them knowing that it's this psychotherapeutic model, because I would probably lose them at that point. And I use this when I'm working with people, and I go through and unpick their trading and deconstruct their trading and try and help them understand themselves, the different parts of the challenge of trading. And it can have enormous power in enabling me to help them become better traders.
Amazing, yeah. I was quite curious to see the origins. Okay, that's where it came from.
It's not just trading. We use it in other things. I coach leaders, managers, teams, entrepreneurs, partners in large firms. It's not just trading that I work with. And I use this model and framework in those companies. In fact, we're just in the middle of arranging and putting together a series of workshops for a major European investment bank that's going to go out to thousands of, going to be presented to thousands of their employees in both in-person webinars and live webinars. And I've used it. We've also showcased it across the world for one giant commodity trading firm to their traders in one particular part of the firm, to try and help them understand what's happening for them as they do the job, so they can do the job more effectively.
It's such a phenomenal model that can be cross-transferred. And one thing that I did always come across was most of the principles that you talk about in the book and using this model is principles of life as well. It can be applied so much in different areas as well.
All areas. This is really a task completion model, or a task completion cycle. For any one task, whether you look at it as a simple task that takes seconds, or something that could be years in the making and construction and management of. So it's it's a human needs cycle in a way, becoming aware of how we are as we do something, helping us manage it as we engage with that external world, and then helping us deal with the aftermath of it so that we can remain this, you know, in a healthy, constructive way for how we navigate the journeys that we go on.
Beautiful. Now, then, nicely swifting into the model, I know we don't have that much time. If you can just give us an overview, especially where, like, just so that some retail traders can resonate with, in this quadrant, where would the entry or the trader clicking the button to enter into a trade happen, where the trade management will happen, and then where the exit, and then where he would be just flat and resting. So if you give us an overview in that sense, that'll be really helpful.
Okay, so it it'd be lovely if it was as black and white as it looked. Okay, so the model is always a very simplistic version of reality. All models are. But if I was to, I like to describe a situation. Imagine you're a trader. Let's just say you're a discretionary trader, um, and you're trading, you know, the Indian stock market or the Indian market index.
It's mainly in London, actually,
Well, they're
Stephen.
in London. Okay, so they
Oh,
could be trading the
and
UK
US, mainly
markets.
US and London,
Okay,
yes.
so you're going to have a lot of S&P traders on there, a lot
Yeah,
of guys
yeah, yeah,
trading
yeah.
S&P futures or NASDAQ futures. Um, so imagine that you decide, I'm going to take a year off. Okay, I've I've had enough of the markets for a year. I'm going away. I'm going to travel the world. I'm going to hire a yacht, go around the world in a yacht. I'm going to completely disconnect from markets. I'm not going to look at newspapers, the news. I'm not going to listen to anything. I'm not going to engage with anyone for a year. And then after a year, I'll come back into the market on the 1st of January the following year. So, so imagine that you walk in on Jan 1 or Jan 2 or whatever, and you sit down at the screens. You're not going to start trading at that point, are you? You need to start understanding what's going on. You need to understand the environment. Okay, you need to understand what's been happening. So you need to get your sense of being, okay, before you even start. You need to have a sense of what is happening and how you're being in that place. You're probably going to come in with no biases, no feelings about the market, not aware of anything that's
Mm,
happened. So you're not going to have a belief that, you know, within this major bull run, within this major bear run. You're just going to look at the price today, and then you're going to start asking questions. You're going to start sensing. You're going to immerse yourself in the market in that first few days or couple of weeks. Okay, just to get, because you don't know anything about it at that point.
mm,
Okay, so you want to start sensing it. That means you ask questions. You use your senses. You use your eyes, your ears, you know,
mm,
your mouth, your nose, your mind. Okay, you develop a feeling for it. You start trying to look back at what's happened over the past few months. What's the big news stories? What's the big drivers of the market? You start asking people, and you want to hear what they say. You want to listen, but without judgment.
mm,
Okay, so you as you're asking all these questions, you're building up a picture of the market. Okay, you're gaining a sense of it. Okay, you're not doing anything yet. You haven't got a view yet. Okay, you're being non-judgmental at this point.
mhm,
Okay, and as you do that, triggers start to happen, views start to form. Okay, it could be a research report you read, maybe some data, some news, an opinion. Maybe it's within you, you know, maybe you reflect on something and think, you know, this is cheap here, or you know, you may have a system that you want to bring into play that acts as the trigger for you. Okay, that's, you know, that gives you a kind of non-discretionary input. You might be using the charts. You know, you might see a moving average crossover. You might see a large, you know, down day,
mhm,
or a particular chart pattern. Okay, you might see the breakout of a line. You know, so you've got all these potential triggers that make you think, okay, something's happening here. I need to know a bit more about it. So this is where you now move into the production phase.
mm,
Okay, this is where at that point you are not in the trade. It's just about
mhm,
you and your being. Okay, and how you're engaging with the world. But you're not doing anything yet. You're not committed to anything yet. Okay, once you get into the production phase, phase two, that's something has triggered you to get in there. And you now start becoming more subjective about things. You start trying to make sense of everything that you've been watching and reading
mm,
and forming a view, an opinion. You start to become aware. And as you start to become aware, you start mobilizing to act. You might have a view and you might think that's cheap or that's expensive, or, the market's going to come in and contract or expand or break out. Doesn't really matter. There's lots of different ways you could cut it
mm,
up, but you start forming an opinion.
mm,
Okay. And you start deciding, am I going to do something? And you have a playbook. You will have a playbook. It might not be formalized. It might be in your head. You might have a formal playbook. It might be systemized. Okay. Which takes a lot of the heavy work out.
mhm,
Okay. Because that more or less tells you what you should do.
mhm,
Okay. But you've got to start thinking about, is this worth doing the trade? Just because I think it's going higher, what is the risk reward to that trade?
mm,
Okay. What's the liquidity like? How much size should I put on? How much capital have I got that I can commit? What percentage of my capital? Where am I going to leave any stops if I have them, or contingencies to get out if I'm wrong?
mm,
There's all these things that this is where you prepare to act.
mm,
And then you get to a decision, am I going to act or not? Yes or no?
mm,
Okay. And if you decide yes, and you've decided how much, when, what price, then you should act. But just before you act, we have a problem. And that's because we're human and our emotions start to come into it. And we start to worry and we start to be concerned and we start to think, what if it goes wrong?
mm,
What if I don't get the desired outcome?
mhm,
Okay. What if I look stupid? Okay. What if I suffer the equivalent of stage fright? Like I said, it's a performance activity.
mm,
You ask those questions. What if? What if I don't do it and I miss out? Fear of missing out. What if I do it and it goes wrong? What if I do it and it's not enough? What if I do it and it's too much? Okay. This is where the self-doubts come in.
mm,
The human element comes in. The emotional element comes in. Okay. What if I look stupid? What if I fail? What does that mean for me? Who am I if I fail? Okay. What if I keep failing and eventually I lose all my money? And
mm,
I'm a figure of ridicule and everyone's laughing at me. We go through these in our mind. We catastrophize. Okay. This is just before we we actually act. We haven't even placed the trade yet, but we've got
interesting.
all this noise going on.
Wow.
Okay. When really we should just be doing the trade because the
Mm,
production phase says,
mm,
do the damn trade. Your playbook says, do the trade. I meet people that build systems that are supposed to make the trading decision easy for them.
mm,
And even then, they still go, okay, so I've backtested this system and it's got this great breakout pattern and it says I should buy, but what if it's wrong this time? They still do it. They still question the very system they bought that's supposed to make decision making easier. Okay. So as we get to the performance phase, the emotions are building within us.
mm,
Okay. Once we're in the performance phase, we've acted, then our emotions are elevated. This is the performance phase.
mm,
This is enter stage left. As I say, it's a performance activity.
mm,
Okay. This is like, you're coming out to bat for India for your debut, and the whole world is watching you. Okay. And you don't want to mess up. You're thinking about messing up now, and your shot's going to be awkward, or, you know, you're gonna go out for a duck, and all this performance anxiety comes into play. You feel like all eyes are on you, even though they're not. You feel like it. Okay. You feel the whole world is watching you. Your emotions become highly charged. And this is why we mess up. We should just be following what we were decided we should do in the production phase. But we're watching the market go up. We're watching it go down. We're suddenly out the money. We're in the money. We look at our P&L, it's negative, or we look at our P&L, it's positive and it makes us feel good. And I'm going to take the profit. But now you're not following the process, the plan. The plan said stay with the trade.
mhm,
Don't take the profit at that level. The plan was on a 5-to-1 risk reward, and you've just ripped it at 1-to-1 risk reward because you don't want to give that money back,
mm,
and you've messed up now. Or you move the stop, the money goes against you. You go, okay, this is going to hit my stop. I better take the stop off because I don't
mhm,
want to be stopped out because it's only a temporary level and it'll bounce back up, and I missed a big move. So you mess with the stop. The stop is there for a reason,
mm,
there to keep you alive. It was part of your plan, your playbook, your process.
Mm-hmm.
You've just messed it up through the. So staying on the trade, see that part of the circle between the act and outcome. You
Yeah.
need to stay on that.
Mm.
Okay. But trying to stay on that is difficult because all the time, from the moment you act, even before you act, you're already thinking about the outcome.
Mm.
You're supposed to let that outcome happen as a result of what you do in the production phase. But all you can do is think about it. And you get caught in this backward and forward between acting and outcome. Should I, shouldn't I? Should I take the pro? We get so caught up in that. That's where the spiraling comes on.
Mm-hmm.
Okay. And we get caught in these vicious cycles. The devil takes over and we're off the trade now. The angel says stay on the cycle. The devil's on the other shoulder going, no, 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 take the profit. Go on, you look great. Everyone's going to love you. Okay. Kids, now move to stop, move to stop. You don't want to get stopped out here. You know it's going to bounce back. Take the stop off. Okay. You know, it messes you up. That little bit comes in. That's your ego, your mind.
Mm-hmm.
It's messing with you. It's really difficult to stay on it. Everyone is wired the same. So whether we think, no one else does this, actually you're all doing this. Okay, you're human. And that's the really difficult part of all performance is that we're human. It enables us to be great. It enables us to do extraordinary things, but it also undermines us
Mm-hmm.
when it's misfunctioning and misfiring and going into our spirals and vicious cycles. And we all do it in some way. Um, Sometimes we do it, this is where we can develop bad habits
Mm-hmm.
that become kind of incubated into everything we do. Okay. And then before we know it, we can't change those habits because they're so ingrained in us.
Mm.
There is only one way out the spiral.
Mm-hmm.
Okay. You have to go through the final phase, the letting go phase, the
Yes.
fourth phase. I can tell you that is where the game is won because
Mm-hmm.
so few people engage in a good way with that. So people go through that. So few people think about it. When I meet the very, very best traders, incredible private traders, retail traders, hedge fund traders, investment bank traders, commodity traders, they do this part better than anyone else. That
Mm.
is the foundation of great performance. The ability to deal with the outcome, accept it. It's not easy because you can have a million should haves. If you had the what ifs just before the act, you have a million should haves just after the outcome. Should have done this, shouldn't have done this, should have listened to that person, shouldn't have listened to them, should have done more, should have done less. We can go on and we can go on and build a whole list of those. They are going to come in because you're human. You're going to question yourself. You're going to doubt yourself. You're going to challenge yourself. You're going to be annoyed with yourself. Okay. That is what's happening just after the outcome. Somehow it's that gets you going, rushing back in to go again, rather than stay on cycle. I knew it was going high. I should have stayed longer. I'm going to buy it again now. But now you're doing it without going around the cycle. You're just doing it as a reaction
Mm.
because you feel like you've missed out or you feel like you've been an idiot. You should have stayed with the trade.
Mm.
So you just buy it without any anchor points, without any plan now. And then it goes wrong, and then you suddenly cut out. I knew I shouldn't have bought it, and you sell it, and you've lost money, and you get caught back and forward non-stop. The skill, the ability to let go and crucially reset. It sounds easy. It sounds like a throwaway line. So few people can do it.
Mm.
I was. That is the secret. That is where mastery comes from. Okay, I rate people generally as a metaphor here. Generally, in terms of the ability to let go and the ability to even engage with it, as about 2 out of 10 for most people. When I meet great traders, they're often no better than about 5 out of 10. But that is a lot better than 2 out of 10. That is enough to make them really good. And
Mm.
then every now and then I just meet some extraordinary people who I rate 7 out of 10 when they're on it. And when they're on it, they can do incredible stuff. And that's what you see great athletes do as well.
Mm.
Great tennis players, you see do that. Great boxers, great sports people, great musicians. great cricketers, great footballers. The ability to deal with something, process it, move on, and come back and be brilliant again and not be owned by what happened.
Beautiful.
And you see the same with great traders. It's all in there.
Amazing, Stephen. That's thank you for giving that. That's one of the best, wonderful insights. And I really wish that the clients are really getting this, how invaluable this diagram is over here. And in the book, Stephen goes into this into much more detail. I know time is flying by. It's amazing talking about this. There's only about like 10 minutes left. So I just going to do as much as I can to ask all the rest of the questions. Just a quick one, Stephen, on this quadrant. If you want to just give us a very quick answer, which quadrant here would you say that most of the traders are facing challenge in?
Well, it's the whole thing. It's, it looks like we're doing it as a separate thing.
Mm-hmm.
We're engaging in all of it. The part that people don't engage in the most is the letting go and the reset. They're not good at it. Okay. And even every trader, even the best, they have every now and then they'll fail at this. They'll get caught up in a spiral or a cycle. Okay. So it's that there's, if you don't come at it, if you don't engage and reset, you can't get back to being healthy in the being phase, which means you're going into it all wrong. You're not going in with an open mind. You're not going in, you're not debiasing. You've got to have a clear head as you go into that being phase. Everyone messes up. It's funny that story I said about taking a year off. I was listening to the brilliant Stanley Druckenmiller podcast last year with the head of the Norges Bank. And he told a story from, I think it was back in the year 2000 when or 2001 when there was a stock market crash, and how he bought stocks at the very top of the market, tech stocks, having previously, decided he didn't want to be long of this rally because he didn't like it. It felt all wrong. And then seeing lots of young traders, what he called not particularly smart traders, making a lot of money buying tech stocks. And he went and bought tech stocks eventually, he gave in because it was just going higher and higher. And he bought them for the wrong reason. He bought them because other people were buying them. He didn't believe in it. So he's done the fear of missing out at that point. And then the market collapsed. Okay. And, he had a disaster. He lost an absolute fortune through that performance phase. And then, he questioned afterwards whether he could do this job anymore. For him to do something like that. And he decided to take some months out of the market, and he didn't even know whether he was coming back. He withdrew from the market for the first time in his career. He told his investors, I'm going away for some time. And if you listen to the interview, I'd advise everyone to listen to that interview 2 or 3 times, okay, at least. He tells how he went away, decided to go away with his family. He told his investors he's going away. He doesn't know if he's coming back. Doesn't know if he's going to trade again. And he said he went away and he was away for about 3 months, like somewhere the other side of the world. He said he didn't look at the market. He didn't look at a newspaper. He didn't speak to anyone. He just spent time out with his family. Okay. That was him letting go. Okay. That is extreme letting go, but that's what he did on that, because he was into such a spiral and he'd become so ridden with self-doubt and disbelief and a lack of confidence. And he did come back. He came back later that year and he ended up having a fantastic year in the end. But he got back to the being phase. That was a whole reset for him, that break. And he decided, after coming in, to go, look, I'm good at this. I just messed up. He accepted it. He was good to himself there. He showed self-compassion, which is a key element of the letting go phase. He's human. That's what he told himself. I'm human. I mess up sometimes. I can't help it. Now he's back into the being phase and he's looking markets again when he comes back. Through this clear head, open mind, looking at everything, sees value. That's the trigger, sees the value, decides how he's going to engage with the market, puts on some trades, absolutely smoked the market, acted, brilliant performance. That's that journey through there. Is there one phase that's more important than the other where most people get stuck? No, I think I described the whole process there. It's a single process. There is
Mm,
not one bit that's more important. They're
mm,
all equally as important.
right.
But there's one part that people don't do as well because it's an afterthought, and that's the letting go phase. And that's where you win because simply people don't do it as well. We're not, in a way, we're not, we don't think of that part of it. It's the final thought, it's the afterthought, it's the final phase, it's that we'll do it later on
Mm,
stuff. Okay? We know it's important, but we don't consider it as urgent.
so true.
Okay, so we think we'll do it later. We'll put it back on the back burner and we'll deal with it another time, and we don't do it.
That's definitely one quadrant. I was talking to you before this as well that I really resonated with the letting go phase because I quickly realized how critical and important it is.